Hello YouTubers, good afternoon. This is another exciting episode of Tax Solutions. So we're approaching the end of the year. It's mid-November. We've got about 45 days left before the end of the year. And if you're going to make some tax moves, it's time to get them moving. So I'm going to talk just briefly here, about 2-3 minutes, about different tax strategies that have got a little something for everyone. So for the single folks out there, you don't itemize, maybe renting, and you're like, well, what can I possibly do? Well, there are a few things that you can do. One thing you do, contribute to an individual retirement account. It's one thing you could do if you had any moving expenses. You want to take advantage of those before the end of the year. And if you're divorced, living in an apartment now, don't forget about the alimony. Whatever you're paying the wife, if it's on a property settlement, if you're paying her monthly, according to a court order, again, that's deductible, however child support payments are not. On to those folks who itemize. There are some things that you can do. For instance, if you've got medical expenses, you've been putting something off, if you want to get it done, if it's going to rise to a level where it exceeds about 7.5% of your adjusted gross, go ahead and get that medical procedure done. Also, if you're thinking about buying a car, for those folks who live in states without an income tax, the ability to deduct your sales tax for a vehicle purchase has not been renewed for 2014, so it's 2013. Make sure you use it before the end of the year. If you're thinking about buying that car, go ahead and buy it now before the end of the year. If it's 2014, you're probably not going to get that deduction. A couple more things. Charitable contributions. Go ahead and make those contributions before the end of the year. If you're charitably inclined, make sure you also get a receipt. If you're giving regularly at a church if you're a member of, no problem. They'll keep track of that for you. Just double check with them. If you're giving to some place like Goodwill, if you're going to donate property that's not cash, you need to keep good records. Take a picture of what you're giving away. Go to the thrift shop. Maybe take a photo of what's hanging on the shelf there to get a thrift shop value. If it's more expensive stuff like art or antiques, you'll want to get an appraisal. If you don't have these records, you'll be disallowed in an audit. If you've got big numbers, they're gonna have a look at your return. They may ask you for some proof. Lastly, small business owners. We've got a whole host of things that you can deduct. Okay, small business owners, you're in really good shape. One of the best ways to take advantage of deductions from year-end tax planning would be to incorporate. That has got some tremendous tax savings. If you've got questions about what you can all realize from that, give us a call. But incorporating yields a whole raft of benefits for you. Other things you can do if you're thinking about equipment purchases for your business, do them before the end of the year. You can take over $100,000 in Section 179 expenses, depending on your business and what it's for. But if you've got a big tax bill looming and you're thinking about making a big equipment purchase, you'll want to do it before the end of the year. Again, if you've got questions, give us a call. So this has been another exciting edition of Tax Solutions. Whether it's tax preparation, tax planning, or tax problem solving, give us a call. We've got a solution for you. Thanks again. See you next week.